Hi, I'm Guy Schwartz, and welcome to the next issue of Call GMS. One of the things that popped into our email was this brochure right here, which is the down payment report. And they had some interesting things in there that I wanted to talk to you about. Bullet point number 1, it says the FHA has implemented a plan to tighten credit requirements by requiring manual underwriting for mortgages with scores below 620 and debt to income above 43. What that means in English is that you can't have a low credit score and get in skinny and have a high debt to income ratio and expect FHA to do it. FHA will go down to 580 credit score, but you have to have some compensating factors, so it's not going to be stretching every aspect of it. It just doesn't work like that. Number 2, use of down payment assistance from government agencies and nonprofits doubled from 2013 to 2016 from 5 to 10%. Well, that's great. I mean, anywhere you can get your down payment, if it's from a government agency or the bank of mom and dad, wonderful. Whatever you need to do to get in, to get on the boat, do it. Next bullet point. A greater percentage of homeowners than renters believe all mortgages require 20% down payment. I can't even believe that we're still talking about that. You don't need 20% down. If you're a veteran, you can get in with 0 down. If you're going FHA, it's 3.5% down. Fannie and Freddie have 3% down loans for conforming or 5% down for agency jumbo. Now, you will have mortgage insurance if you don't put 20% down, but don't worry about that. The mortgage insurance doesn't last forever. Next point. If they had to put 20% down, 36% of the millennials and 40% of the Generation Z would have to postpone buying a home. I don't understand why the message is not out there. Maybe they think that smoking still doesn't cause cancer, but whatever. Let's stick to mortgages. You don't need 20% down. Nearly a quarter, or 24% of millennial first-time buyers want to own a home before getting married. Good for you guys. We want you to get out of our houses. We want you to get off the couch. We want you to get out of the basement into your own place. When I was growing up, I couldn't wait to have my own house. Not necessarily a house, just my own place to live. So yeah, go on, keep it up. Get out of the house and get your own place. It's a great tax deduction. First-time buyers often underestimate how long it takes to get to the closing table. Well, listen, if you get pre-approved, you can get to the closing table in 10 days. If you don't get pre-approved, maybe it takes 30 days. Depending on whether it's a new home or not, you may have to wait for it to be finished, but nobody's breaking a sweat over 30 days. Some 52% of first-time buyers consider more than one lender when choosing a mortgage, and 1 out of 5 actually apply for a mortgage with more than one lender. Well, you know, we certainly are competitive. You don't have to waste your time applying all over town. It creates another inquiry. It costs money because eventually you're going to have to pay for an appraisal. So how many appraisals do you want to pay for? If you find the one lender that you trust that's giving you a good deal, go with them. All right, next. 72% of millennial homebuyers this year indicated that they have saved for a down payment directly from their paychecks, up from 69%. Well, I'm not sure how else you save if you don't save from your paycheck unless you're going to the bank of mom and dad. With respect to closing costs, you can sometimes have the seller help you pay for the closing costs. Now, you're not getting something for nothing. They're going to jack up the price of the house in order to credit you the amount of money for the closing costs, but you don't have to wait and save dollar for dollar for the closing costs, because you can either finance 95% or 97% or whatever percent, depending on the type of loan you are. It's sometimes faster to get into a house if the seller can credit you for the closing costs, but again, there's no free lunch. Somehow or other that has to get factored in. Next one, the average down payment among first-time homebuyers in 2016 was 6% and 14% for repeat buyers. Well, that's nothing new. If you have 6%, I'm saying yippee. This last one is the most disturbing one for me. Today, the African American home ownership rate of 41.1% is more than 30 points lower than the rate for white Americans. I don't really understand why that is. I can tell you I did dig a little bit deeper into that particular issue to find out what was going on, and I found the study that they were referencing. And in the study it says, securing enough cash for closing and down payment is a barrier to home ownership. That's for all ethnicities. That's not indicative of black people, Hispanic people, Asian people. It's everyone. But they did raise one interesting point that I wanted to bring up, and it said, black homebuyers who are less likely to receive parental support than white young adults. Well, let me tell you something. Even white young adults, parents, are not lending experts. They may have bought a home, but they're not experts and they don't know what's going on in the current market or what's available. So the bottom line is this: call an expert. Whatever ethnicity you are, ask somebody that really knows and does this for a living so you know exactly what's going on in the current market. All right, other than that, rates are wonderful. They're very low. 10-year Treasury is about 2.1, and it's a great time to either buy or refinance a house, so give us a call. Kirk out.